All right, welcome to The Explainer. The Indian market just closed out a really fascinating session, and we're going to break down exactly what was moving the numbers and what it's signaling for the next few days.
Okay, let's dive right in. If you just glance at the headlines, the Indian markets had a solid day, finishing with some really decent gains. But the real story, the one you really need to pay attention to, is what's bubbling up just under the surface. So let's start with those headline numbers. First up, the Nifty 50. It pushed higher, closing up by over 0.5%. It was a really decisive move, the kind that keeps the good vibes going.
And hey, it was pretty much the same story over on the Sensex. It also put up a strong gain, climbing nearly 0.6%. And this tells you there was some real muscle at the top end of the market today.
All right, so we've seen the numbers, but what was actually powering this move? What was the fuel in the engine, right? Let's unpack the forces that were really pushing things forward. Look, this wasn't just a one-trick pony. You had a whole mix of good news working together. The rupee was stable, which always helps with confidence. Crude oil prices were a bit softer, which is great for inflation fears. And we saw some smart, targeted buying in some of the big heavyweight stocks. On top of all that, you've got the technical signals, like the RSI, that's starting to look pretty bullish, hinting that this momentum might actually have legs.
Okay, but here's where it gets really interesting, and this is the key to the whole day. This wasn't one of those days where everything goes up. No, not at all. It was more like a tale of two completely different markets trading at the same time. So on one hand, you had sectors like banking, power, and the PSU banks. They were having a great day, really pushing higher. But then on the other hand, you've got the giant IT sector acting as a huge drag. And this isn't a new story, right? This has been a theme, with worries about global spending hitting these guys hard. It was literally pulling the market in the other direction.
And this quote right here, it just nails the problem perfectly. You have this persistent, non-stop selling in the big IT names. And it's basically acting like an anchor on the entire market. It's stopping what could have been a much, much bigger rally.
Okay, so with this tug-of-war going on, how does that actually translate into specific stocks? Let's pinpoint a few movers and shakers to watch.
But wait, before we get to the stocks, there's a term you need to know: consolation breakout. The easiest way to think about it is like a coiled spring. A stock just trades sideways, kind of boring, building up energy. And then, bam, it breaks out of that range. That breakout can be the start of a really powerful new trend. So this table, this really lays out the whole story of the day in 5 stocks. You've got Lumax Autotech, which just had that coiled spring breakout we were just talking about. Then you've got market leaders like Adani Ports just flexing their muscles. And of course, banking giants like Kodak providing that crucial support. But then, there's Infosys, the perfect example of that struggling IT sector, where every little rally just gets sold off immediately. And to round it out, you've got a name like Torrent Power, which is getting a boost from both a strong technical chart and some positive news.
Okay, so we've gone from the 30,000-foot view down to the individual stocks. Let's zoom back out now and tie this all together. What's the big takeaway here? What's the market really telling us?
Now, even with all the green on the screen, we have to talk about turbulence. The VIX, which is basically the market's fear gauge, is still pretty high. It's basically flashing a sign that says, buckle up. When it's sitting up near 14 like this, it means traders are expecting more bumps in the road, more choppy action. So smooth sailing? Yeah, probably not.
So, let's put it all together. What do you need to remember? 1. The overall feeling is positive, but it's fragile. 2. That IT sector is the big question mark, a huge risk. 3. For the Nifty, keep your eyes on 25,600 as the floor and 25,800 as the ceiling. And 4, don't be surprised by the volatility. It's here to stay for a bit. And all of this leaves us with the one big question as we head into the next session. Are the bulls, led by the banks, strong enough to keep this party going, or is that giant, struggling tech sector finally going to pull the whole market down with it? That, right there, is the puzzle everyone's trying to solve.